The Indian economy grew by just 4.4% in the third quarter, but it has grown much faster in FY22 and FY21 than we originally thought. In the third quarter itself, capex growth, investment, gross fixed capital formation is strong at 8.3%, but consumption is weak at 2.1%. What more do the numbers tell us about the current quarter and about likely growth in FY24? I have with me four top-notch economists. Ladies first, Sonal Verma of Nomura, Pranjul Bhandari of HSBC, and a gentleman, Soumya Kanti Ghosh of SBI, and A. Prasanna of ISEC PD. Ladies and gentlemen, thank you very much for joining me. Sonal, let me start with you. What's this 4.4? Is it a terrible slowdown? We don't like a 4 handle. We want at least a 6 handle. So is this an indication of a serious slowdown?
Not yet, Lata. I wouldn't call it, and I mean, I would not term it a serious slowdown. I think what we basically learn, taking into account the base effects and the past revisions, is that, yes, as you said, post-pandemic, the growth recovery was stronger than we had anticipated. But the momentum right now is surely moderating. I think there are two drivers here. One is the global growth and the spillover onto exports. And two, I think this time around, the slowdown in private consumption is starting to basically become more visible. This is probably because of the high inflation having a negative impact on rural side of demand. But essentially, exports and private consumption are leading to a moderation. On a sequential basis, Lata, I mean, our estimate of GDP in the December quarter is about 1% quarter on quarter. So on an annualized basis, it's actually also running slightly over 4%. So I think going forward, the question is, whether the export engine, the consumption engine, and the investment engine can actually fire up or not. And given the current uncertainty on demand and financial conditions, it does look like the third pillar, which is investment, will suffer. So as of now, it's a growth moderation. The forward-looking view does suggest further decline.
Oh, okay. Yeah, actually, I will come to your FY24 forecasts, and the forecasts are, I think Nomura's, HSBC, Kotak, all of them are running at 5.6 and below that. But Soumya, how strongly should we take this capex growth, 8.3, that normally improves productivity? Do you think that the coming quarters we can, bank on this capex to see faster growth?
Yeah, thank you, Radha. I think as far as the capex growth is concerned, yes, yesterday's number had come in line with our expectations, but there seems to be some slowdown which is happening if you look into the quarter-on-quarter numbers or the seasonally adjusted numbers. The important point to note here is that the consumption numbers are actually have been much weaker than it was expected. And generally, if you look into the third quarter numbers of consumption investment, that's always peaks. And this year, a better proxy of consumption is basically quarter on quarter, because if you look into 2%, that also has a base effect involved. Even if you look into the seasonally, the quarter on quarter numbers, that is running at 7% against an average of around 8 to 10% over the last decade. So in my sense, while capex growth is still holding on, but we can discuss this later, but consumption growth may have already moderated. And just a little bit of addition over here, if you look into the bank credit growth data which came out last evening, I think there has been a significant moderation in the bank credit growth, which is now declined by, I think, from 3.5 trillion monthly in December to around 37,000 crore. And credit to housing sector has now turned negative. So while we should worry about investment a little bit, but maybe worry about consumption a little more, given the fact that the growth seems to be moderating faster than what we are anticipating.
Okay, no, that's important what you're speaking about, credit growth and to the housing sector, because we've just got data that house registrations in Mumbai in February are lower. I mean, it's slow. The pace is slackening considerably. Now, Prasanna, how seriously should we take this? Do you think that this endangers? I think you have a 6% forecast for next year and a 7% for the current year. Most of the others are at less than 7% for the current year and less than 6% for next year. What gives you the confidence that we may still be able to engender 7%?
Yeah, good morning, Lata. I think, frankly, now this year's forecast doesn't matter, right? I mean, the only thing which matters is whether this quarter the economy kind of maintains some momentum and carries forward that momentum into next year. Otherwise, I think the 7%, whether it prints 7, 6.9, 6.8, beyond the point, it doesn't matter. For next year, yeah, I mean, you are right. We are at 6%, but we kind of qualify it by saying there are downside risks. And I think that's already been covered by the others. I think the main downside risk comes from global cycle, basically. But there again, I guess, at least in the early part of the year, we have got some good news from both US and Europe, and even looks like China growth could turn out to be reasonably strong, at least in the first half of this calendar year. So maybe that impending slowdown, which was anticipated globally, maybe that is getting postponed. And that should be a positive for India growth, at least in the first half of our fiscal year. But otherwise, yes, I think and it's also been pointed out that monetary transmission, which is probably still, some of it is still pending in India, that should also be a headwind. So I mean, we are at 6%, but clearly we see downside risks, and probably we might end up lower also. But generally, our sense is that looking at this data, especially the revisions, basically, I think economy had been stronger than what we initially thought, and even consumption growth. And especially, I think for this year, I think looking at the quarterly profile also, services recovery has been reasonably good. And we still think that the services recovery from pandemic is incomplete. So basically, that is one reason why we are optimistic about next year. And of course, the other part is the capex push by the central government. Unfortunately, I think the state governments are not able to kind of match up with that. But assuming if the states are also able to kind of pick up on delivery of capex going forward, that should be another positive for next year's growth.
In a previous note, Prasanna, you pointed out that even the central government capex is only because they are adding a lot of the central departments like NHAI into them. So even the central government capex perhaps is the headline number is looking better than perhaps the internals are. But we'll come to that in a bit. Pranjal, you know, the worrying factor now is that both you and a bunch of you actually are standing at only 6.8% for the current year. That means you are expecting only a 4.4% growth in the current quarter. That is looking a little ominous. I mean, 4.4 for this for Q3, 4.4 for Q4, and you know, about 5.5, 5.6 for next year. Are we so far away from 6%?
Yes, thank you, Lata. Look, you know, I think we are, but let me start with the good news. I think the good news is that right now, growth seems to be far more equitable than it has been in the last year. You know, we finally started seeing some rural recovery. Rural wages are going up. Non-durable production is going up. We are seeing some uptick in informal sector, which had been damaged a lot in the last 2 years. But, you know, with commodity prices coming off a little bit, they are also standing back on their feet. So I think growth is more equitable now than it was in the past. That's the good news. But the bad news is that urban demand, urban consumption, which had been a pillar of our recovery in the last couple of years, has seriously begun to slow. You know, when we look at a host of indicators, for example, the consumer durables in the IIP, you know, all of that has begun to slow. And then we also look at some of the manufacturing inventories. You know, inventories are high. So you have urban demand slowing, you have inventories high, which basically means that manufacturing activity over the next couple of months could actually be much weaker than we are seeing right now. So yes, I do have a fourth quarter forecast of about 4.4%, which is lower than the CSO's implied 5%. And this does show that there could be some sort of, you know, difficulty in the next couple of months. One last thing, I think the next few quarters are very important because we'll know what really happens to the winter wheat crop. If the winter wheat crop is a bad crop, then this rural demand that has begun to rise is going to be a problem. And I think from that perspective, I think the next 3 weeks will give us a better sense on how the next couple of quarters growth will be.
You know, actually, that was going to be my next question, and to Soumya. Soumya, you have the best forecast for FY24. You have a 6.2. Prasanna has 6, and the ladies have closer to 5.5. So, in 6.2, have you factored in the possibility of the Rabi crop being not as good? If that happens, are we in for some, more dreary growth numbers?
No, I think, Lata, that's a fair question in terms of an Rabi crop. And there are already talks in the market of an El Nino phenomenon happening. But if you actually look into India's history since 1950 and the correlation between an El Nino and a possible drought, I think that relation is tenuous because it doesn't guarantee that if there is an El Nino, there could be a drought. In fact, there has been periods when the food inflation has been actually lower when the El Nino has happened. So it's too early to take a call on that, assuming that the Rabi crop is not as good as we are expecting. So my sense is that agricultural growth will continue to remain strong. And also the fact that there has been a significant push to the of the government capex. And if you look into the government numbers, I'm leaving aside the states over here. Last year, they said they will do 7.5 trillion. The revised estimate, it is saying they will 7.3 trillion. So my sense is that if the uncertainty doesn't escalate the way it looks like now, we will be able to get to a 6% handle or above in the next year, because we are also all expecting that this year the growth could be a meltdown, but ultimately we could be able to hit 6.8 to 7% in the current fiscal. So my sense is that let us wait out for some more incoming data, but at this point of time, a 6% handle looks eminently visible for FY24.
Okay, now aapke muh mein ghee shakkar. There are two positives. All El Nino seasons have not led to droughts. And Soumya saying that a 6% handle is possible if the weather doesn't play too much of a havoc with our Rabi and, for that matter, even the next Kharif. We have to take a break and say goodbye to our Bazaar viewers, but we are not done with our discussion. After the break, we will continue, and all of you will get to hear the whole show later on in the day and in the week. After the break, it'll be Chartbusters.